amount of money on his portfolio? Our experts this week are Kunal Bothra, Saumil Mehta and Shrikant Shetty. Catch the thrilling game of portfolio building on DNSN The Stock Game only on ET Now. The closing bell is closing in on you.
But the next 1 hour could define the trading day.
We bring you the micro view of what's moving and driving the market in the final session.
Catch India's top technical experts disclose the best closing strategies.
And help you pick the best buys today that will give you supernormal profits tomorrow. As markets come to a close,
Opportunities open up with closing trades. Only on ET Now.
Brought to you by calltradeindia.com 1-800-103-4422 to get list of suppliers. Reliance Net Connect come my best plan. It's simply better.
A.Balasubramanian is a lone ranger in an industry that is well known for its high attrition rates. He's been with BIRLA Mutual Fund since its inception in 1994. He has risen the ranks through several market peaks and troughs and is now the CEO of the fund house. Bala, as he's popularly known as, specializes in managing hybrid funds like BIRLA 95, BIRLA Advantage Fund and BIRLA MNC. He is the man responsible for growing BIRLA Mutual Fund's assets from 15,000 crores in 2006 to over 60,000 crores today. It's a tough job in a bad market, but Bala is not one to get bogged down by negativity.
The noise level, especially for India, both in domestically as well as global market, especially in the media space, is very, very high, which is somewhat negative message that goes around. But from logically from India perspective, though the fiscal deficit has also been high, it's been rising. The debt to GDP for India is just about 70%, and the banking system to the funding actually the entire GDP growth, it's about just about 70%. When I compare that with China and few other countries, is a lot higher actually. At the same time, commodity prices globally, especially India being actually the largest consumer of the oil, commodity prices have globally have cracked by about 22%, especially crude oil prices come down by about 22 or 23% year to date, which is a big positive actually for India. The other commodity prices too have corrected. And India being actually a country which is largely dependent on import of oil, definitely I think it's a little benefit. The question is how the current account deficit will move around. So any direction which is coming on the actually rupee appreciation could have somewhat of a cascading impact to actually make that country a little better. Then second, of course, is though we have been questions on governance issue of late, both politically as well as on few other areas, but interest rates we still have very high interest rate regime, and fortunately, whole of last year, Reserve Bank of India kept raising interest rates, when the noise level in the industry was against that. The noise was against RBI hiking interest rates, but the RBI kept hiking interest rates. We are at a stage where the interest rates are high, and the global commodity prices come down, and largely from the debt to GDP point of view, we are reasonably better than most of the countries globally. But for actually some of these other issues which are currently facing, which are probably, I would say, the decisions that are being taken.
Have these issues been priced into the market, you think? And that's why the second half of this year could spell good news from a market standpoint?
In the second half, we could see actually the market giving some kind of bounce back and higher level of participation. And we continue to believe that that in the second half we could see some bit of uptake. But if you ask me, some of those uncertainties, to what extent is factored in the price, I think to large extent, if you look at the stock market behavior, it's getting priced in actually, and maybe it also gives some kind of an assumption. It has a limited downside, and especially at a time when the things turn a little bit better, both from the global market point of view and the Indian interest rate point of view, we will probably see actually the participation levels rising and confidence coming back in the market.
But do you think we can break out of this 5-year prolonged lull that the market has been facing? Do you think all the pain will get done away with by the time we close out 2012?
Whether we can get back in a complete bullish mode will still remain a question mark. For one simple reason that the kind of speed at which we were focusing on reforms, the post I think 2008 crisis and the 2009, I think India did exceedingly well in terms of carrying out some of the reforms that were needed from the economic point of view, both in terms of fiscal stimulus as well as the monetary stimulus. To what extent that's actually taking shape? And I think if we are able to get some kind of political support, more from the point of view of rolling out some of the reforms. So I'll put actually reforms on two parts. The reforms in the nature of something which attracts forex flows, which is the FDI, and the reforms are more in the form of domestic in nature, where we have done some kind of power sector reforms a few years back, and there is a need actually to increase the power tariff, but otherwise some of these power projects could become a little unviable. So how do you actually make the balance between the consumers and the government finance as well as the people who are operating their business?
Sectors like aviation, sectors like infrastructure, sectors like real estate, retail, even capital goods for that matter, and power, as you pointed out. I'm enumerating all these sectors because they've been finding favor of late in the market.
Yeah.
How much of the excitement that you see in these sectors today is a function of expectation that things would change versus reality of actually seeing things turn on the ground?
We'll have to look at it from two angles. The stock price, of course, reflects most of the time the worst that could happen for the company, or the worst that could happen for the sector. And that's the way historically the market always behaves. At the end of the day, the market cannot ignore the asset valuation beyond a point. The market cannot ignore actually the price to book of some of these companies which have created beyond a point. At the same time, one cannot of course jump the gun and then saying that the happy days are back for some of these sectors which are bound to be volatile, given the fact that the segment in which they are operating.
Would you be building positions in either one of these sectors?
Yeah, I think from the portfolio point of view, the way I think we look at, we need to have of course a core portfolio which is purely long-term, fundamental driven on the basis of the earnings. I think the companies have to of course create sustainable earnings year after year for us to of course take a bet. So that remains your core portfolio, which is a philosophy which you maintain across all our funds what you manage. At the same time, the market valuations, which are more of a tactical the nature, which of course the kind of opportunities comes every 2 years, this kind of opportunity comes. You see this actually coming in sectors like aviation, sectors like power, sectors like commodities. We need to of course play these sectors only on the basis of tactical call.
So your tactical call on these sectors is positive?
Yes, where we have taken certain exposures in these sectors, for example aviation. Very selectively of course we have taken exposures only on those companies that again we have to look at it, how the company's balance sheet also runs, how is the business operations running. And though this is an opportunity which one can assume, yes, it's a great opportunity, but it's an opportunity also sustainable. And that's why I think the real crux of identifying such kind of companies within the same space, which I think fundamentally you believe that you can own, and fundamentally you believe that the management has got the wherewithal to tide over these crises, and fundamentally you believe that the balance sheet of the company is managed in such a way, the debt to equity is not so much high where the company will be pushed to the corner and leading to a bankruptcy. These are some of these assumptions which we'll have to make before we pick even the tactical play in the sectors.
Where is it that you're spotting value?
There are certain stocks, for example, some of the large cap PSU banks which have been beaten down very badly. At the same time, we one has to look at how does the whole equation at the current market price works. And we have turned marginally positive on some of these high quality large cap PSU banks. And the same way within the capital good sectors, we do have looked at some of these companies who are large in size and they play actually very critical role in the Indian economy when it comes to the question of infrastructure space. So then within that you look at some of these companies who will actually tide over this crisis. But the price of course reflects something which is quite dangerous from the company's point of view. But at the same time if you look at the management capability, the way I think been building the business, there is a value to it. And that's the way we have been taking selective exposure in these sectors to get an alpha on the overall portfolio.
Bala, we'll talk more about that in just a bit. Take a short break on that note. When we come back, we will discuss with A.Bala his specific fund philosophy with regards to some key funds at Birla Sun Life. Stay tuned for that.
With markets on the downside, what strategies are Asia's best money managers adopting? Catch Asia's biggest market voices on Market Makers View from Singapore, only on ET Now.
Are you running your business or simply running? To make your business big, enroll in Businessman Ki Pathshala. Run by the guru of SMEs and FMBs, Jagdish Joshi. SMS JJ at 575758 or log on to jagdishjoshi.com.
Open and close the markets with the top technical analysts in the business. Ashwini Gujral and Mitesh Thakkar. Only on ET Now. Always thinking markets.
Welcome back. We are at Dublin at BITC Grand Central and I'm in conversation with A.Bala of Birla Sun Life Mutual Fund. Let's talk about Birla Frontline, which is essentially a large cap and a mid cap fund. When I look at the portfolio, I see that there's an overweight on capital goods. Is the overweight on the sector largely focused on some of the select large cap names which are marquee or well diversified businesses like L&T or BHEL, or is it a broad call across the sector?
Yeah, I think the way the frontline equity, which is one of our flagship fund, which has got a size of roughly about 3,000 crores. The way the portfolio is constructed is it first hugs actually the BSE 200 index weight. The index weight is about 6.8% for capital goods sectors, and here it has a weight of about roughly about 9%. Within the capital goods sectors, as you rightly put it, stocks like L&T do part of the portfolio is roughly about 3.5 or 4% of our portfolio. There are certain other companies in the same space, which are multinational companies who have a strong presence in India, such as Cummins. It's also part of the portfolios, which has got nothing to do with more of the capital goods sectors, which currently we are facing in India, especially related to the infrastructures.
So well diversified.
Well diversified. That's why I think, as I mentioned earlier, that ultimately the success will lie on how to actually choose the stocks in that specific sectors, and which would have relatively a lower downside risk. At the same time, earnings of these companies would just not depend only on India story, also derives benefit out of some of the global presence what they have.
Okay, when I look at your top 10 holdings in this fund, I see names like Reliance Industries, Infosys, Bharti.
Yes.
In fact, from the top 10, the ones that have generated most returns have been the private banks, not so much of the leaders from the other sectors.
Sure.
My question to you is, why do you still keep your conviction with these stocks? Is it purely because of the mandate of the fund? And secondly, how long is the duration for which this conviction holds in a particular stock?
The top 10 stocks we generally put into those stocks where we have a very high level of convictions, and we need to also have an exposures because they are large in nature, and being the large cap, they also participate in the market. Except one or two stocks could move from top 10 or below top 10, but 90% of the stocks will stay invested on 90% of the stocks for a very long period of time. The way we have seen in the last many number of years, generally the top 10 of the portfolios, 90% do not change even beyond 2-3 years.
Financials is your top holding in this fund, followed by energy and technology.
Yes.
The consumption themes, where returns and alpha has been generated over the last 6 months, are lower in the portfolio, whether it's autos, whether it's FMCG or even pharma. Why is that? In some sense,
financials do capture actually the consumption story. I think they participate both in the infrastructure as well as in consumptions with respect to being part of the funding of the whole segment. At the same time, the consumptions has to be again divided into two parts, which is of course, as you rightly put it, auto also part of consumptions. But if you look at all our portfolios, we are a lower weight on the two-wheeler, which largely has got very stable earnings, stable outlook, and the fundamentals are far superior to some of these automobile segment, which is in the commercial vehicles and passenger car segment. At the same time, within the automobile space, we have a fairly large exposure to the commercial vehicle sales, commercial vehicle companies. Not just because in the commercial vehicle sales in India is happening much better, it's also because of some of this global revenue that is coming into the companies is also far better. So that's why we have pushed in the portfolio.